Welcome back to In Business. Congress may have come up with what they say is one way to cut the budget deficit: raise taxes on the share of profit paid to managers who run venture capital, private equity, and hedge funds. It's called carried interest. Here's what it means. We're going to get an explanation from Marco Masotti. He's a New York fund attorney and partner at Weiss. Thanks for coming in today. There's a lot of buzz about carried interest, as we just explained it there. Either you're in the Ayn Rand camp and you're angry about it, or you're in the Robin Hood camp and you think this sort of is the right way to go. Leaving the politics out of it, tell me what's going to change for private equity and for hedge funds.
Yeah, let me just, perhaps I could take a step back and describe briefly the types of compensation the managers in both types of funds get. They get a management fee based on the assets that they're managing, and then they get an allocation of the investor's profits, what we refer to as carried interest. It's much more an issue in the private equity industry, where they invest for the long term and their long-term capital gains. What both the House and now Senator Backus' amendment introduced a day or two ago are effectively saying is they want to change the way that carried interest is taxed from capital gains rates, currently at 15%, to a blended rate over time. In 2011 and 2012, taxed in the way it is taxed currently, 50% of it at least at the current characterization of the income, so at the capital gains rates, and then 50% at ordinary income rates.
The concern, and one of the criticisms here, is that by reducing the financial incentive to participate in this space, that ultimately may hurt innovation. You'll have less interest in people in private equity bankrolling things. Is there any truth to that? What are you hearing from your clients?
I think there really is. I don't want to get into the fairness of the tax code. I mean, you could look at it across the board and find things.
But how are firms preparing for this?
But in this case, the real concern I have, as expressed through my fund manager clients, is that it's altering the balance that we've lived with for a very long time. The compensation structure that the investor and the manager have entered into. You might have a private equity manager who made an investment 3 years ago has run his business expecting to sell it in, say, 2 or 3 years' time, has managed his costs in a way, and now suddenly is receiving 100 to 150% increase in his tax rate. So the concern is that it alters the balance that we've lived with for decades among the professional, the investor. And as a result, is going to change the way the manager looks at making investments.
Now, money always moves faster than legislation, than regulation, right? But Bloomberg has been reporting that hedge fund managers are finding ways to work around this, even before passage, right? So we had reported that Eddie Lampert had decided to start taking direct ownership, having his hedge fund transfer shares from the companies that he invests in a way that would allow him to avoid these tax increases. Is this a common practice? Is this something that you're seeing more of?
Look, I don't think there's any common practice yet, but I think managers and their lawyers are starting to think about ways of dealing with the new law. Once the law is passed, I'm sure you'll be seeing those types of things. I'm not familiar with exactly what he's doing there, because it'll be the way his documents are crafted may be different from other managers. But I think what he's doing is he's received his carried interest in prior years, and what the fund is doing is distributing in kind the interest that the fund held, probably the same, represented by the same value that the carried interest represented, to him personally. So now he's holding it directly, not through an investment partnership.
Is that something that you would advise a client to do?
I think, without more information and a specific law, I'm not sure I would.
Well, I know that you're putting in a lot of hours at the office figuring this out and advising your clients. Thank you for explaining this and for giving us some perspective here, Marco. And Marco Masotti joining us here from Weiss.